Good evening, traders. It is Friday, July 21st, 2023. We're going to go through the daily video here. We'll start in the markets and take a look at what the markets did today. Let's start with SPY and see where we ended up on the day. So for the day, SPY ended up pretty much dead even to yesterday. So opened up on the day, moved higher, and then finished at the low of the day exactly where we finished yesterday. So a zero spot, massively unchanged on the day. Nothing going on in SPY. So SPY unchanged on the day. It remains obviously in an uptrend here as we move forward. So just lower high, or higher low, higher high, higher low, and not a higher high, higher low, now a higher high. So moving forward, MACD running a little bit out of steam here. RSI tailing off a little bit on the day. We're still well above the 21 EMA here on stacked moving averages. Nothing to really see here. Just move along and ignore SPY. So nothing here that indicates we're dropping lower. Nothing says we're going higher. We're still in an uptrend. So the overall move is higher looking. We take a quick look at the Qs as well. Nothing particularly going on here. Down a fraction on the day, down $1, 13.3%. Really nothing going on here on the Qs as well. We remain above this previous resistance line, which could become support. It's also the 21 EMA in here. Now, one thing that is notable on the Qs is we had a PSAR reversal signal today, so that is definitely a little bit of a bearish signal. Now, it doesn't mean this, won't last more than 2 or 3 days, but we would have to get all the way back up here to the highs to trigger anything bullish. So right now, a little bit of a bearish tone with the PSAR reversing today, which it did not do on SPY, although we are over the 21 EMA and this previous resistance level here. So we'll look to see if those provide support. MACD, little crossover here on the day, and RSI heading lower, although it's still at 55, so still in decent shape. Really nothing to see on the weekly charts here at all, but a fairly interesting candle pattern here on the week. Bulls tried to run us up. Bears won the day. We finished the week pretty much at the lows of the week this week. So we'll see how this moves going into next week. Lots of big tech earnings, Fed announcements, all coming up next week. IWM, this one also remaining in an uptrend. I'm going to get rid of these lines on here because those crooked lines don't help you a whole lot. You can see higher low, higher high, higher low, not a higher high, now a higher high. So even if we can drop all the way back down to 180 something on IWM and still have a higher low going on. So this particular support level dates back to this previous pivot point. So time to stretch this thing out maybe a little bit more and put that on. So you can see there's some possible support there, which is going to be pretty close to coinciding with exactly where that PSAR dots are going to land, as well as probably the 21 EMA as that starts to move forward. So that's going to be my pullback zone. Is do we make it back down to this 21 EMA and then bounce and move higher? That's going to be the guess right now. We'll see if that guess has any merit as we move forward. Then you still have this next zone right above here that we didn't quite get to. But it's all healthy and good for the market. MACD tipping over, RSI dropping on the IWM right now. Finished near the lows of the day. So we opened higher and then dropped to near the lows of the day. Nothing to see here, nothing exciting going on. So Amazon took a pretty nasty hit yesterday And if we take a look at Amazon, it also remains in a pretty nice uptrend, as you can see by the moving averages, all heading higher. They're all stacked. We did hold on to the 21 EMA here on Amazon. So we tried to break through it for the day, finished right on it. That's a pretty good sign. We did not get a PSR reversal signal either. We moved higher off of that. So doesn't mean anything if we do or don't get it, but we'll be looking for some sort of consolidation on Amazon in here. We got earnings heading our way next week, so we'll see what happens. But if you look at this RSI down here, you've had just a series of really lower highs as the Amazon has hit higher highs here. So RSI not telling you that we've got a lot of great momentum. MACD is negative and dropping there. So we're going to keep an eye on Amazon. Bollinger Bands are starting to tighten in here. As you can see, these little gray bands are the Bollinger Bands, tightening up a bit, maybe putting us into a little bit of a squeeze type of scenario in here. So we'll see what happens if we consolidate and then maybe spring higher on a continued move on Amazon. And then let's take a look at Microsoft really quickly. Microsoft, look at this candle on the week, drove way up here, hit a high, okay, and then tailed off and finished not at the lows of the week, but you've got PSR still bullish on this, kind of a weird look to it on the weekly. Big volume candle this week on Microsoft, and mainly that was due to a pretty big up volume day here, a pretty good selling day today, and this pullback right to the 21, bounced off of it a bit. So that's what we're going to really be watching in a lot of these stocks is, will these 21 EMAs, or maybe even the 50 EMA, will those hold up as on a pullback here, indicating that, yep, it's just a pullback and now another move higher. That's what we'll be watching. MACD tailing off on the daily and RSI heading down daily. So definitely some negative momentum. We'll see what happens on Microsoft. Apple as well, coming out in this uptrend here. Time to actually move the highs higher. So Apple hitting this new high area in here and making some newer highs as we go. So looks pretty good on Apple. It's not really, look at this. This is a pretty tight channel. If you look at the 3 ATR, which is this yellow line, and you look at the 21 EMA, the green line, okay, it's pretty much traded in that range above the 21 EMA. It has not broken this 21 EMA like many of these other charts have done. But if we pull back here, bounce, and we move higher, we've got a bullish PSR signal here, even though MACD and RSI are headed down. Any bounce in here would still be a pretty bullish sign. Now we start to break these 21 EMAs, and then we got some things that we need to take a look at. All right, so there's a couple quick charts on the market, seeing where we are, just an update. Nothing to see, some good, healthy selling the last couple of days. We're heading into earnings. Fed's going to be looking to potentially raise rates this week. There's no reason not to raise the rate. Everybody's expecting that rate to go up. I'm not sure they can say a whole lot that's going to really spark the market one way or the other, unless they say, we're done, we did our job, have at it, which I don't think they're going to say. But we've already priced in an interest rate hike, so I really don't expect much fireworks unless they say something that is extraordinarily bullish. I don't think they can be any more hawkish than they've been. They're trying to talk the market down. They're saying that they're going to be watching data. They need to get inflation under control, which it's starting to get in line a bit, but they also need unemployment and wages to cool off, and that is not happening. So I do not expect that the Fed's going to give up at this point in time. They're going to continue to make those claims that we're not where we need to be. They may not raise till November or what have you after this, or maybe they won't raise after that. Who knows? I don't see them pulling back rates. I think people that think, oh, they're going to start to reverse themselves in January, I don't see it happening. Who knows? And you know what? That brings up a great little chart here. Let's talk about TLT really quickly here. So let's look at the bonds and what's going on. So you've got this pretty significant downtrend here. I don't think this is a surprise to anybody. And we were on these lows, from back here, a little bit of support right in this 99 range here. So we bounced off of this support area. I'm going to extend these lines a bit here on the support level. Pretty good selling day yesterday with some decent volume on TLT. Nothing much today, as it kind of just had an inside day holding the 21 EMA. I still think if you believe the Fed has one more hike to go before they really take a pretty significant pause and then at some point start to peel back these rates, then bonds can only go higher. That means rates are going to come down, which means bonds are going to be climbing. So I think, again, I still think TLT is one of the ways to go, or if you want to be a little bit more adventurous, TMF and go for the 3X leveraged version of it. You got to fight a little bit of that negative drift in here, but if you really think bonds could take off, then TLT or TMF would be the ways to play them. All right, let's jump into the account and take a look at what happened today. So on the day in the main account, Delta 121 on the day, pretty much an unchanged day. Our Delta stayed pretty much the same as it's been, 0.04%. Theta, we put on a few trades today. We needed to try to get that Theta working back higher, but we don't have a lot of free BP to work with. But Theta bumped up a bit for us to 745, which is a 0.26. Still in this 0.25 to 0.3 range that we've been in on Theta. I would like to see it at 0.3 or higher. It's just been a struggle to get there in this low IV environment, but we'll be okay with that. Net lick on the day, even though Tasty Trade had me up on the day, it had my net lick lower than the previous day. So it's the weirdest things. Just using the numbers coming out of Tasty Trade. I don't necessarily trust everything on that platform to work correctly, but I think it was close enough. So 281, 496 net lick. So overall, we're still in pretty good shape. We are just a few $1,000 off of our all-time highs that were set back on the 12th. So it's over a week ago, or actually just a couple of days ago, we were almost at the new all-time highs. So we're right in that range, bouncing around. Buying power 150, moved up a bit. We did put some trades on, even though we took some stuff off. 53% BP usage. It's good enough for me. And then we did close 2 trades for $1,125, giving us a whopping $74 to the good side for the week, but we're still up for the week, mainly because of this day back here on the 18th, where we took a loss on one of our strangle trades on live cattle. We had to get out of that. Of course, I think we top ticked it perfectly because live cattle reversed almost immediately after stopping us out, and we'd still be in that trade today, but I'm following my mechanics. I booked the loss. I move on. I really don't look back, and I don't care. And then we had a hedge come off. So $74 for the week. However, we'll add that to the previous couple weeks that we've got going, and we are up $8,235 for the month. So a nice 3% gain so far on the month, which is exactly our target with a whole week to go. So if we can maintain that next week, maybe put a couple more trades to the good for us, we'll have a fantastic week. Moving on, and let's take a look at the trades from today. So as we take a look at what we closed today, what we did here on HE. So HE is another one of our 112s that we've had working, but lean hog futures is HE, and we were able to close the 60 naked puts for 0.025 today. So we removed all of this BP off of our trading account. We locked in a 88% gain for sure. We took in $900 on this trade. So if it expires, if the remaining PDS expires worthless, that 900 we've already booked. If we sell off on lean hog futures, then we could potentially jack this up a little bit more. And then we had our weekly Amazon covered calls on our synthetic long position. We had those expire worthless today, $225, a nice 7% on margin return on those, 100% premium capture. That lean hog trade also ensured really a 17% return on capital so far in just 39 days out of the 63 in this trade so far. So pretty happy with that. We did also have today a corn futures 112, the PDS that was left over, the put debit spread that was left, just expired worthless. We had already closed the naked puts for a buck for 1.25 back on the 14th here. So those were already closed back here on this particular trade, booking a 90% overall return. So I don't count this in my wins and losses because I've already counted a win based upon the naked puts being closed for a win. So I'm not going to double count a single trade as two, even though I only took off a portion of the trade. So that's why I leave these in yellow. I'm not double counting the wins on those. So 2 nice wins. Now that we're done talking about them, we can move these to the green, and we take a look at our month. Again, $8,233 for the month, 26 winners, only 4 losers, 87% win rate. Fantastic month of July with 10 days to go on this trade, and a lot of our 112s and 112s on futures. We've already taken off the naked puts on these trades, so we're sitting there with not much risk to the downside on them. We've got some hedges rolling, so we are in great shape with the account. All right, so there's the day for you. $8,235 for the month, $74 net for the week, positive, but it's positive, and we were able to overcome those losses from earlier in the week with some nice gains today. So having a fantastic month so far, and we will see you guys on Monday. Now, over the weekend too, I recorded a video on how I set up my charts, a little bit of technical analysis and how I set up the charts, what I'm looking for. Even though I'm not a huge fan of technical analysis, I use it just to really review the markets and some stocks. But that video will be out tomorrow as well. So if you like what we're doing here, please hit that like button. Please subscribe to this channel and go ahead and check that notification so you can see when I'm posting some new stuff. All right. You guys have a fantastic weekend. We'll see you either in the Discord channel or we'll see you back here on YouTube. Take care, everybody.